Today, we're going to be talking about why time is the most valuable asset in life insurance. We are going to be welcoming someone incredible to the podcast. I'm really excited. Today, we're going to be joined by Michael Kapuni Parks. He is the CEO, president of Midas Leadership Development. He's a fitness trainer. He's this financial advisor with his team that he has built. And what's most exciting is he is a new dad of a little girl. So now he has two kiddos. So how do you do it all, Michael? Welcome to the podcast. How are you doing today?
Doing good. Thank you for having me.
Yeah, you're welcome. So we're going to be diving in a little bit as his time is precious, and we're going to be talking about honestly something that people don't talk about too much, the time. Why time is so important in life insurance. People don't think about, they think about it later in life. As they're getting closer to retirement or older in life, but really you need to think about it when you're young and putting money in and saving yourself for your future. So, Michael, when you think about having a young family and your young family and other people that have young families or just 20-year-olds, what is some advice that you would give them and what is the importance of starting a policy?
Yeah, no, thanks for that question. And obviously, thanks for having me. Um, when I think about this question, the first thing that comes to mind is I should have got it much, much earlier. And where we don't think about things when we're in 20s, early 20s, mid 20s, and the fact that I got it when uh, more or less mid to early 30s, I feel like I was a little bit behind. The reason is when you think about the different types of policies out there, there's cash value life insurance, there's term. Cost has a lot to be associated with it, but also the idea of either getting sick or or losing a loved one early on in life when we least expect it. Again, we can't plan for the future. I mean, we can't plan for what's going to happen tomorrow. And the fact that we have the ability to get ourselves set up both from a financial and from a death benefit standpoint early on is something what we all need. And then I run into clients that are in their 40s and 50s and haven't even heard about it. And the fact that when I talk with them, I have the ability to help them out in a way that not necessarily it's too late, but know that it's the right time. They saw it at the right time is a big thing because there's never a better time to get protected when it comes to insurance.
Absolutely. And I just think a lot of people who are younger just don't think about it. They don't think about the importance of why it is to kind of put yourself in a situation where you can get qualified for a policy. Because when you're young and you're healthy, your insurance is cheap. And the older you get, kind of the more expensive it is. And I love kind of when you want to talk about insurance. A lot of people have term with their company and then they just don't worry about it. But what would you say is important when you think about maybe term with your company versus kind of what we do with IULs? What's the difference and what's the importance there?
Awesome, great question. And I when I think about this, um, the biggest difference, we're not even aware of what we have.
Mm,
I think that's the first thing. People will say, and any client that I sit in front of, they say, "Oh yeah, I have insurance." Well, what type? What kind? How long does it last? How
yeah.
much of it do you have?
Hmm.
And when you really, really think about it, most clients, even myself included, because I was in fitness for close to 9 to 10 years, I had no idea what I had. So the
Hmm.
fact that we have more awareness of what we have from from more awareness for myself to what I've had in the past is the biggest thing. The second part to that is temporary versus permanent,
Hmm.
right? And having the ability, there's two different types of temporary, and there's obviously a permanent, but the idea that when it comes to coverage, most will at work will cover accidental and death,
Hmm.
and most people won't even know what that even means versus something that we have here, more so living benefits, where if we get diagnosed with a critical, chronic, or terminal illness, we're able to accelerate that death benefit. So,
Yeah.
well, living benefit.
I love what you said about most people don't know what they have. I think that in my mind, I think of, oh, okay, something came up. Where's that paper? You're rummaging through your files trying to find the paperwork, and so it's so important to know what you have. People really underestimate what they have. They think, well, I've got that with work; it'll be taken care of, or I have this small policy my mom got when I was 5 years old, and a lot of times those don't cover really the insured's needs. So it
Yeah,
is so important, like what you said, to be able to um, uh, get a policy that will really take care of all of your needs. And especially as you get to be a young parent and you're a homeowner, you need to be able to cover that home if something happens to you. I know that I have definitely had a few friends who unfortunately have become very ill and passed away, and then they're having to rely on their GoFundMe, you
yeah.
know. So I wanted to talk to you a little bit about when people are considering policies. Is it important to get policies for them, their spouse, their children? What advice would you give maybe a young parent or someone in their 20s that doesn't have kids yet?
Awesome. Great question. I think the first thing is being able to create a plan for yourself. Sitting in front of somebody that might be able to assist, help. I mean, we could do a lot of research, but the challenge with research and is we end up going onto Google and trying to get into this spiral
Mhm.
and thinking this is the right thing where when you sit down with somebody that has the information, kind of like where being, for example, coming from the fitness industry, you could tell the difference with someone coming in for the first time, doing things on their own, versus having that trainer that's aside and alongside with them to be
Mhm.
able to guide, help, coach, mentor, do anything they can to help them achieve their goals.
Mhm.
In our industry, which is why this fits in so well, is just having someone that's going to help you create a plan. Like
Right.
whether is a permanent insurance right for me? Is a term insurance right for me? How much should I be setting? How should it be set up? Um, like who should I set it up for? My kids, myself, um, my family. Like what else should I be considering?
Right.
Because when I think about our company, we're not just a one one time pony or whatever that question
Right.
whatever. We're a one-stop shop to financial services.
Yes,
Where
definitely.
understanding insurance is a big part, but there also comes that trust piece. And I have old money sitting around. So, and
Mhm.
that's where the professional and the plan comes into place.
Absolutely. Having a financial professional sit down with you. A lot of people, I know, especially like some of my sons and their friends, they have all these subscriptions, right? And a lot of us, as we go through and we get older, we're not even paying attention to that. So when you really do a financial review, you sit down and look at how much you spend at Starbucks, because one of the myths is insurance is expensive, right? But obviously, like I said, the younger the better, the less expensive it is. But as you get older, you're spending lots of money on Starbucks, different movie subscriptions. And when you can really maybe keep some, take some out, and put them into a financial plan to protect you and your family, it's just so beneficial, right?
Yeah.
And I think that people don't think about that. Even having a policy for a child. We have $1 million baby policies, they call it. And it's a lot of things that the wealthy do. And I know on TikTok you hear a little blurb about it. Can you speak on that? What are $1 million baby policies?
Awesome. I love that. And the best part about that is that's the reason why I actually got started with insurance in the first place. Um, I saw this back in April 2020, and the idea and concept to create generational wealth, be able to leave a legacy behind, but also to be able to open up a policy for my son at the time, who was, I believe, 6 months. So I
Okay.
got it around literally like 3 to 5 days ago back in 2020. So my policy is 5 years old. My policy for him is 5 years old. So seeing the cash value that's also grown for one, but also knowing that it's not just a college type of account. It's an account that we have the ability to have for college and past college too.
Yes.
So think of it as a loan that I can loan to myself, loan to my son for college, but also when you think about the wedding, when you think about the car, when you think about any other financial expenses, that's where you have the ability to dip into. And the
Hmm.
fact that you could dip into it and continue to accrue cash value and grow over time is one of the best things that you could have. So, but
That's
when you
kind
think
of,
about
yeah.
just the million
Mhm.
dollar baby, it just that's exactly what it is.
Yeah.
There's books called What Would the Rockefellers Do? That's what they set up for their kids and their kids, and that's how they
Hmm.
created a legacy that lasts generation after generation.
I love that. And I love that you did that for your son because I think about my sons when they were little, I would get those Gerber things in the mail and I don't know what this is. I can't afford this. I would just toss it. And so now that my kids are older and they know so much about how we could have invested into their future, they're kind of
Mhm.
upset with us. And why didn't you get us a policy, Mom? And so I think a lot of people think about insurance, right, as something I only need when I pass away. Can you talk to me a little bit about the other benefits of having a policy?
Yeah. And when you think about insurance too, I'll start with there's two types. There's a term and there's a permanent. We'll
Mhm.
break it down that way. When you think about a term, there's a standalone term and there's a term with living benefits.
Hmm.
So the idea of term being able to pay very little money but leaving behind a lot is one of the best ideas you could absolutely think of. I mean, we get insurance for literally everything, like a car, our home, our our HVAC, our heater, for
Right?
literally everything, and
Uh-huh.
also for our phones, but we never get it for ourselves. So I think that's one big thing to consider. But going a step further, there's also standalone term, but there's also term with living benefits,
Hmm.
where I alluded to a little bit earlier, where if I were to get diagnosed with a critical, chronic, or terminal illness, I could still accelerate that benefit ahead of time. How do I know this? I had a client that was battling stage 4 cancer. I
Hmm.
and the fact that she had $500,000 policy, she was able to accelerate 90% to help pay for her chemo,
Wow, that's
right?
amazing. Yeah.
And knowing the financial stress or the burden that it could cause a family while going through that process, she's able to use it, not have to ask for it, but
Mhm.
also go through her treatments and not have to worry about anything financially. Okay. She actually had several policies set up. So that idea of paying very little money but getting 90% of the 500,000, that's a big deal,
Mhm.
you know?
Mhm.
So that's the term side. Now, when you think about the permanent side, you have the idea that having a policy that's going to last you for the rest of your life.
Mhm.
Now, there's a million types of policies that are out there when it comes to permanent, but just understanding there's cash value that's built up in one, but also carrying a death benefit, knowing that if I ever needed to borrow from my policy for any kind of reason, whether a medical expense, a family trip that you're planning on, anything like that, I could borrow from my policy, but I'm borrowing as collateral from my death benefit.
Mhm.
Now it's going to be up to you, depending on the company that you go with, of how you want to pay, if you want to pay back and when and how it's set up. But the idea that you have that as emergency is a big deal.
Yeah, it
The
is.
other part to that says too, like if I borrow that, that's not anything that's a claim when it comes to for tax purposes. Because anything that's attached to insurance by law is 100% tax free.
Yeah. That is a great benefit. I mean, there's so many benefits, right? One, you get protection if something does happen to you. But I love that, this is what the wealthy do, right? They put their money into these policies. They're not paying the high interest credit card fees that we get roped into. They are not trying to figure it out. The people working 9 to 5 day to day, they're just thinking, well, I don't have enough money to make it to payday. What am I going to do? So I think really looking back at putting a policy like this into place for a child is just amazing because it's not that things come up. Maybe you need money for college. Maybe they need a car. Maybe they're going to have a wedding. Maybe they're going to buy a house. And if you could borrow from yourself, it's kind of amazing to me. I love that. And I think that the fact that we could do this for clients and really
Mhm.
help them to move forward in their future, but also for their family, their generations to come, it's really a blessing. And I also, what you talked about, I mean, I had broken my ankle, I'd broken my elbow, and kind of had a crazy fall down the stairs. And I have medical insurance, but does medical pay my mortgage? Does it pay my car payment? It doesn't, right? So I would be able to pull out from that policy, because of those living benefits and even a term. Terms are less expensive, but the fact that we offer our clients a term with living benefits is just, so amazing. I know people that are really young in their 20s that had a car accident and couldn't walk after. We don't know what life is going to bring. And so, what I love about these policies, it protects you about the things that are going to happen in your life that you might have an issue, but it also has a fun part about pulling that money out and not being strapped with debt. And
Yeah.
it's just a real gift to give to our children and our families. So it really protects our long-term future. So I just am so excited that you were able to do that. I'm sure you'll do that for your daughter and you'll really
Mhm.
put them in a good situation. And so I know another thing that people think about is, well, I don't really need this insurance. What would you say to them, the misconception about, oh, it's just a death benefit?
I mean, there's so many different things when it comes to insurance because I was one of those people. I believe that being in fitness and working out and exercise are going to be enough until one day, like you run into a family member or friend that's caught in their tracks and ends up getting diagnosed with a heart attack or cancer,
Yeah,
and like you start to begin to think and question, is like, okay, um, can this happen to me? Well, you don't have no idea if it's going to come at us or
right.
not,
They don't
So
care how old you are, right? Or
yeah,
what's happening in your
because
life.
at any point, Um, recently my wife had someone that passed away in her 40s with a drunk driver.
Mhm.
So that idea and that idea is just it happens.
Mhm.
And we can't control that, but we what we can control is a legacy that we leave behind, the generational that wealth that we have. And we think it's so expensive, but it's also co expensive compared to what? Like you
Right.
brought up Starbucks. We're spending $7, $8, $9 every
Gotta
single
have that
day,
latte.
So
Make it at
nine,
home.
250, $200 every single
Uh-huh.
month just on Starbucks. Just as much as spending habit, so is saving for it,
Yeah.
and putting a little bit away every single month for some type of insurance is something that no, I believe we all should consider. I'm a huge advocate when it comes to it. Um, Another big thing that I get is I don't have any dependents. Well, you depend on yourself. Now, if that's the case, do you have a long-term care living benefit that's able
Mm.
to assist
Mhm.
and help you at the same time? So if
Mhm.
nobody's carrying you or caring for you, and that's where it could actually pay out while you're still alive. A lot of other people will say, I can wait until later, but again, we already approached that type of question. Like, tomorrow's not guaranteed. So
Right.
understanding that's one of the biggest things. Like, just make sure your family's taken care of.
Mhm.
And when you think about it's just the death benefit, I already kind of talked about the idea of having a death benefit attached to cash value life insurance. I could borrow it as a loan for myself.
Mhm.
So, so these are powerful financial vehicles, and you think of it, the easy way to think about it is a financial pocket knife for our financial future, you
Mhm.
know. So you can do a lot with it.
Yes. And I think that that is smart, like kind of like the topic of the show, starting when you're young. I mean, I think about when my own mom passed away, there was no money for insurance for her. And so we had to, fortunately, my sister was able to help out with that. But it's such an emotional, stressful time. And you don't want to have to go through that. And I love that we can help our clients save for the future, plan for the end to kind of and be with their family. We offer a lot of different opportunities, whether, the last episode was on annuities, whether you need
Hmm.
help with figuring out what to do with your 401k or your inheritance, trying to plan that smart financially so you don't run out of money, whether you need to figure out what you're going to do when your child gets to college. They have the plans that you maybe would have what is it, a 403b, and then you would not be able to get a scholarship. Whereas this, like you said, anything attached to life insurance is tax free. It's really exciting, right? Because you can know that all the dollars that you're planning for the future, your children can pull that out and they can use it, right? And they're not going to be strapped with all that student loan debt, which is,
Yeah.
I think we have a little bit of a crisis with that right now. So
Yeah.
I'm just really excited that you have been able to start for your family. I love that we can help other families. To be able to grow their assets. So there's just so many different ways that we are able to protect families and give them stability, right? And I would just kind of like finally just kind of asking you if you could start today and putting money into an account, what is something that you would encourage maybe young families, individuals to do?
The easy way to answer that, something is better than nothing.
Hmm.
Right. Whether it's 50, 100, 150, like if you could put a lot into something, then just get started. I think that's always the first step is we're always contemplating and thinking about it, kind of like going to a gym or exercise. Always, because that's
Oh,
like the
I
biggest
forgot to
thing.
say, what were you doing when you got into this industry?
I was in the fitness industry. I was a fitness manager for up to 9 to 10 years. And you run into those pre-contemplation and contemplation phase. Like, should I do it? Do I want to set foot in a gym? And then just taking that step, actually step in, and you get the sense of relief.
Hmm.
And when I think about our industry, when it comes to insurance, finance, all that, it works very similar, where we might have been thinking about it, we might got an ad, we might have got something, and it might have triggered something, but we didn't take action. I think the first step is just sitting down, consulting, having a good conversation, understanding the needs. Whether you move forward or not, at least you create awareness for what might be needed for you and your family.
Yeah.
So,
Hmm.
but also just from that point, like just being very aware, like life insurance is for us, it's for the people that again we could potentially leave behind too.
Yeah.
So,
Yeah.
I think considering everybody in this situation is a big thing.
Yeah, I think that that's really good. And like you said, we have insurance for our car, for our home. We need to have something on ourselves. You've got your fitness with your body, right? You're trying to live as long as you can. Well, where's your financial fitness? And I think that's why you're such an expert when it comes to this, is because you really have that mindset. You've honed in on really taking care of yourself the best way you can and the clients that you had. And now you're kind of thinking, well, now I need to help them to be physically fit financially. So I just really appreciate your time. Um, it's always exciting to be able to share this information because I didn't know it. You didn't know it back in the day. And as we are learning and growing, and just meeting people on the street, I've had the most fun and just sharing this information and seeing people be successful and
Yeah.
being able to protect themselves. So I just thank you so much for coming on with me today. And anybody that's out there that you need something, my information will be in the comments and the description wherever you find it. And I look forward to speaking to you soon. Thanks, everybody. Bye.
Thank you, Shanna.